going to walk us through now an example of a business owner that overcame some financial difficulties and how they did it, and some of the strategies that they used to make their money last or to kind of get through the problem that they had. It all stemmed from a time in the economy when they had done a bunch of work for a whole bunch of customers, and the nature of their business was such that they had to pay for supplies first and use those supplies with to make good on the customer jobs or as part of the customer jobs. And then some of these big jobs ended up going bankrupt and they didn't get paid. So it was kind of the worst of all worlds. They had paid suppliers for materials, they had paid all of their contractors for the work that had been done on these various jobs, and then they didn't get paid. And then it was a lot of money. It was a couple $100,000, and for a private business or a small business, that's a lot of money to try and figure out how to fix now. And so here's some of the things that they did to try and get through it. They did factor some of the invoices that they had with other clients, and so instead of waiting the typical 90 days to get paid from a customer, they were able to go to a lender who provided factoring or accounts receivable financing and said, look, can you lend us 80% of the value of these invoices? And so that enabled them to generate some cash flow immediately to keep the lights on. And then they started working out terms with their suppliers. There was one supplier in particular that they had a major bill outstanding with. And they basically called the supplier and they said, look, here's our choice. We can go out of business and you can get nothing, or here's our story, here's what happened. Can we work out terms with you? We'll give you some money now, but we will go on a payment plan with you over the next 12 months where we can pay off that balance. And so immediately the phone stopped ringing. They were able to negotiate something. Their supplier wasn't happy, but their supplier, I mean, they understood as well. They understood that they were giving out these supplies on credit. They know that things happen, and so the business had probably a 10-year plus history at this point of working with the supplier. So the supplier really wanted to kind of work with them. And just as a side note, the way their business worked was that suppliers would give them credit, or rebates is actually more appropriate. They give them a rebate if our customer had done so much work with the supplier. And so basically the customer called the supplier back and said, look, we'll forego our rebate, and if you could give us terms, that would be really great. And so between some of those things, that the supplier was able to give them a break, and they were able to pay that particular supplier over time. The next thing that they started doing to generate cash immediately on go-forward jobs was offering clients discounts. And so they would say to the client, look, our normal billing cycle is, you pay us here, and then you pay us 90 days after the job is done. And so what they started to do, and it worked a little bit, was with some customers just offering cash, or rather offering discounts to get that cash in the door sooner. So they would say, if you pay us now, we'll deduct 10% off the price. If you pay us at the normal periods, then we'll just charge you our normal price. So that was something they were able to do. And a couple of last things that every business knows, they cut expenses. So obviously, if they were paying for things they didn't need, they cut it. In particular, this business had a big advertising line item, and they had signed some advertising contracts that they thought they couldn't get out of, and so they called up the advertiser and said, look, we're just not in a position to be able to pay you, and we know we have a contract with you, so what can we do to try and sort this out? The other thing that they did was they took less money out of the business personally. And so what that resulted in is, of course, their personal debt went up, because now as they go to buy groceries and pay their utility bills and do whatever they need to do with their kids, they're doing it on credit cards. But at least that money wasn't coming from the business anymore. And even though credit card debt isn't preferable, at least that financing was there to be able to help them during this moment in their business. So overall, they were able to lean out their expenses and through some of these strategies make it to see another day, or to fight another day, as it were. Their business, of course, over time entered into new challenges as they fought their way out of the kind of the difficult moment, and then they just found themselves kind of in other difficult moments, which is pretty typical for small businesses. I mean, it's really hard to, it's easy to start a business. It's easy to say you want to be a business owner, but it's very difficult to make actual profit in a business. And so this particular business, as they continued to move along, they found other products they wanted to offer to customers, and that created different challenges. And so I'm not sure they're in the clear yet, but I think they're getting there. And I would encourage you that if your business is having financial difficulties and needs money, I would encourage you to create an account at mlenow.ca, get an Emily score for your business. Just the process of going through those steps and getting a score is going to teach you a lot. But better than that, once you do it, it takes about 5 minutes or 10 minutes at the most. You can look at the interest rates, you can see the documents that you're going to need, but more importantly, you can see who the banks are in the market and what score you need to have in order to be able to get money from them. And then, of course, we're there to help you all the way through.